Hey everybody, this is Professor Tonya Evans here for Tech Intersect, and this is another special episode of the Tech Intersect podcast focusing on the Digital Money Demystified series, where each of these episodes leading up to the release of the book on October 24th, I've invited some of my favorite folks who are not just notable, but some of the best and brightest minds in blockchain and crypto education, also the intersection of work, wealth, and innovation, and certainly focused on the future of work, wealth, and innovation. At the top of that list is my dear friend, Dr. Hans, who has been in conversation with me in a previous episode, which we will share in the show notes. But this time we're flipping the mic, and I'm going to sit on the other side and put myself in the position of someone who is navigating this space to help you move through your particular crypto journey with all of the information so you demystify the space. And we are focused today in this episode on the myth that certainly because crypto evidently is a scam because it's too volatile. And so I asked Dr. Hans to come on and talk about this issue of volatility, what it means, the nature of money, and also how that factors into a really strong financial literacy education to be your proper foundation moving into the space. So I am turning this over to Dr. Hans. We will talk about all of that and more in a moment. But first, my dear friend, Dr. Hans, welcome.
Oh, thank you so much for having me, Prof. It's just such a delight. And I know, I've been looking at the book that's coming out, been reading it, and it's just been absolutely phenomenal
Oh.
how you're walking individuals through. And I don't want to give anything away on our, during our discussion today, but you all listening, you're in for a treat. But let's go ahead and dive in. So, Professor Evans, uh, what do you believe holds many people back from, either investing in crypto or becoming crypto curious? What do you think holds many people back?
A lot of it has to do with, well, there are a number of different things, but one in particular, and putting myself in the position of starting to learn for the first time back in 2017. I believed all of the myths, just for criminals, only a scam. But underneath it all is a fundamental misperception or misunderstanding of the nature of money, the nature of markets, and just using money and assets as tools, which I really have started to think more as tools of empowerment,
Mm,
tools that lead to freedom in a number of different ways. And so there's so much mis and disinformation, or we call it, fear, uncertainty, and doubt in the space. It really prevents people. And I also think that it can be a very scary topic. And I know from our previous conversations, even folks thinking about money, they have a visceral reaction.
mm,
So getting underneath it, you can't really fully leverage and appreciate the future of money if you aren't in right relationship with your current assets. So I think a lot of that prevents people from even learning more, to your point of being curious, let alone actually buying. And one of the biggest and most persistent myths is it's too volatile to even
mm.
touch.
Yes. Yeah. So volatility, before we dive into discussing why people feel like this asset is too volatile, let's break it down. Can you explain to the audience, what does volatility even mean? And with that explanation, is volatility a bad thing?
Great question. So volatility basically refers to the rate at which the price of an asset, in this case, obviously we're talking about crypto, the rate at which it increases or decreases for this for some type of return on investment. And
Mhm.
sometimes that happens over a long period of time, meaning there would not be a great deal of price fluctuation over time, relatively stable, right? Oftentimes we think of bond market as providing some stability, or the level of a currency, like generally speaking, the United States dollar, that doesn't ebb and flow too much. We're in a hyper cycle of inflation now. But then you think of basically the speed and degree of price changes. And so high volatility really means that the price of a cryptocurrency can fluctuate really dramatically over a short period of time. We are recording now on August 30th, and even at the end of this month, in the last 48 hours, actually, the price of Bitcoin, for example, had gone down to maybe about 25 per coin, then like up to 27,000. So experiencing that much change and then up to 31 and back down, that could
Yeah.
happen in a relatively short period of time. So it's not good or bad, but it is literally part of the life cycle and energy of any asset class that has some type of value, if that makes sense.
Yeah, and I often say everyone loves volatility when it's to the upside,
How
right?
about
Because
that?
because then they are making money. It's volatility to the downside, which individuals do not understand. So
Mm.
why do you think crypto is so volatile?
What I've learned, and a lot of what I kind of extrapolate on in the book, is the nature of nascent or new emerging markets as that particular market, in this case again cryptocurrency, starts to open up,
Mm,
becomes more global,
mm,
and there are more participants involved, and it is immature. It's an immature market. It's not fully baked in. We're literally watching, for example, the plane. We're building the plane as we're flying it,
yeah.
because the rapid nature of the development of this technology in particular, but not certainly in a vacuum. We see the proliferation of new tools in the decentralized web, in the digital economy as well, and crypto assets are a part of that trajectory, to be sure. And so understanding that all markets at some point in time are new,
Hmm.
they emerge. There is a lack of agreement about the proper price for something. And so you can have folks bidding high, bidding low. There's not a lot of agreement until it starts to settle in. So, the fact is that cryptocurrencies have experienced price fluctuations and periods of stability, also
Mm,
known as sometimes either a down market or a bear market, or
mm,
sometimes we describe it as the price moving sideways. Not good or bad, but there's relative agreement about from buyers and sellers about the nature of the value. So not good or bad, but for all emerging markets, not the least of which is crypto. We could have said that for the early stock exchange as well, that there was such volatility and unpredictability that it gave rise to certainly the SEC. There all sorts of regulations came in to make the markets more predictable and reliable. That is
mm.
not the nature of crypto at this moment in time. And so it's probably a natural part of this type of asset class that isn't controlled by a particular government or entity.
Yeah, what do you believe is the cause, or what tends to drive crypto prices up, right? With positive momentum, and what tends to drive it down?
Yeah, this is interesting because we might actually even have to separate out
Hmm.
some of the OGs like Bitcoin and ETH, um, versus obviously a stable coin that's supposed to never fluctuate in price, right? Those, when I talk about the OGs in the space, those that have significant historical data, so Bitcoin going back to January of 2009, we have Ethereum in 2014. I will say that even though we have thousands of coins and tokens at this point, they tend to, they tend to follow Bitcoin, even ETH to some extent. A rising tide lifts all boats. But at its essence, we still have to use fundamental principles of when there are more sellers than buyers, prices go down. When there are more buyers than sellers, prices go up, and that is a fundamental across all asset classes.
Mhm.
I think there's some, we may have talked about it before, but some macroeconomic impacts when I think about the price since 2020 when the pandemic began and everything was shutting down, and there are wars and rumors of wars and all sorts of other systemic pressures on the asset class itself, having nothing to do with the mechanics. The
Mm,
fundamentals of Bitcoin remain. The fundamentals of other crypto assets remain. Um, then, of course, we had the crypto contagion, which
mm,
scared a lot of people last year with the Sam Bankman-Fried and the Genesis Bank and all sorts of other things happening in 2022. We also have regulatory uncertainty. It's not that the space is unregulated, but with uncertainty, there tends to be periods of time where lots of money sits on the sidelines or goes to find more agreeable and welcoming markets outside of the United States. And so a lot of those things have played into the cyclical nature of
mm,
the rise and fall. I think that money in general has an energy, it has a life cycle. We have periods that are up and periods historically that are down across asset classes. And in fact, final point around Bitcoin, next year in 2024 will be another halving event. And historically, prices have risen of Bitcoin and then the rest when there's a halving or halving period as well. So that's a life cycle that you really have to study a bit to wrap your brain around to know when it might be time to hold them and fold them, or buy, walk away, run, like all of those things, to make sure that you are moving consistently with the market rather than against it.
So you know and understand that this asset is volatile. Why has it still been in your good graces? Like,
Mhm.
why do you still consider this asset and educate others about it?
So I think that there, with a lot of risk, there's also the opportunity for reward, because in the United States, in particular, crypto assets generally are taxed as capital assets. And given the historical positive impact over time to communities that are focused on acquiring capital assets. What are those? Those are assets that actually create a return on investment in addition to having their own value. So, for example, a capital asset like a home, you might buy it at 200,000. By the time you're ready to sell, maybe the value is 300,000. You get your original investment back. That's your basis plus the upside of the return on your investment as the asset class. You may also rent it out and have income that passively is generated as well. So there's a lot of power in capital assets. But with that, there's been a lot of systemic limitations. Maybe you can't buy a house. Maybe you've been
Mm,
redlined out of it. Maybe
mm,
you don't have access as a matter of either education, getting the type of employment that's not just a job, but also a career that offers
mm,
you retirement assets, which many people leverage and use to pass on wealth from one generation to the next.
mm,
Being a high income earner is not enough to actually become wealthy,
mm,
because income is taxed at a higher rate than capital assets are. It's the reason that wealthy people say, don't pay me in income, pay me in stock, right? I'll take $1 of income, but give me, $10 million in stock options, right? So for all of
mm,
those reasons, we have to get creative. When I think of people of color, when I think of women, other systemically marginalized populations, you have to get creative about how to accumulate wealth with the money and the assets of the future. And that's why I lean so heavily into crypto education. There are scams out there, there are missed opportunities, there is volatility, but there's also great opportunity as well. And so that's why I'm still so bullish on the space.
Yeah, when I think about people in our community, right? Often when you listen to cookie cutter, let's call it financial advice
Mm,
or expert commentary, it is, just buy a regular index and do nothing, right?
right.
Which, when I hear that, there's nothing against an index. I feel an individual as a baseline should have exposure to some kind of, US stock market index. I agree.
Mm,
But can you imagine just stopping at the status quo, right? We're looking at the wealth disparity. And the thing about catching up to a group that's ahead, or like if you're in a race, if you want to catch up to someone who started running like a very long time ago,
right.
you cannot run at the same pace that they are running if you're looking to catch up. So from an investment standpoint, that means that we have to do more to identify and and find assets that will grow much faster, right? So to the discussion we're having, volatility, that will grow a little bit faster, and add that into the mix of capital assets for the future, right? If your listeners were to go to Google and they were to type average price of a home in 1940, it's $2,938
Right.
dollars. So pretty much about $3,000 in 1940. Fast forward to today, I believe the average house is about 420 or 450,000 at that growth. Most people are so focused on real estate now. Meanwhile, when I look at that asset, I'm like, you should have gone back to like 1940, right? So,
Right.
what is the next asset that is going to provide that 100x potential growth? And I just don't want, and I'm sure you share in the same sentiments, we don't want people in our community to miss this opportunity,
That's right.
right?
That's right.
Um, so let's talk about stable coins for individuals who perhaps do want exposure to crypto, but perhaps they just want to keep the value steady, or they want to be able to make a fixed kind of percentage, let's
Right.
call it return on their capital investment. So almost like a, and I know this definition isn't the best, but almost like a dividend of sorts, or like, or like a bond distribution of sorts. So we can start first with talking about stable coins, and for individuals who maybe in the future, not now, are thinking, hey, once this thing is established, it's regulated, how can I get some kind of passive income stream, whether it's a dividend coupon or some well, whether it's a dividend or maybe like a coupon, like how bonds pay out.
Right. Right. That's fascinating. And it's interesting that you're saying this because I've been thinking about how to reimagine ways to onboard folks. I was very focused in 2020 when I opened the Advantage Evans Academy, really focusing on Bitcoin. I'm not a maximalist per se, but I have
Mm.
supreme respect for Bitcoin.
Hmm.
It's just different.
Yes.
I also am a former chair of the Maker Foundation. I love the Ethereum ecosystem and see there's a lot of power that we have a lot to work out on the DeFi space to be sure, but certainly a lot of opportunity. And ETH and the Ethereum virtual machine, it's different. It has
Hmm.
a different intention and purpose altogether. So I'm a both and kind of person and
Hmm.
respect them both for different things. So that's an aside. With that, thinking about the role that stablecoins, as you mentioned, play into not only holding a digital asset that is a medium of exchange, right? Or a unit of account, 1, 2, 3, 4, or I pay you, in a particular stable coin that reflects the price of some real, I don't want to say real world asset anymore, some
Mm.
type of physical asset
Mm.
in addition that that has a lot of power where folks who are somewhat risk averse
Mm.
may still find the benefits, as you've mentioned, in the crypto asset space, where that's a great way to learn how to fund a wallet. It's a
Mm.
great way to find utility and use cases as you travel the world. I travel extensively. I don't want to have to go from dollars to euros, to et cetera, et cetera. I can use a global currency no matter where I am. It's a great
Yeah.
deal of power in that. It's frightening to the status quo.
Mhm.
Most of our taxes are going to fund wars to protect borders. But what
Mm.
about the reality that we're moving into a borderless society or probably
Mm.
returning to it?
Mm.
If I'm being honest, right? So
Mm.
the idea of focusing on a stable, I love USDC. Tether obviously is a very critical and important part of the ecosystem. There's Dive
Mhm.
in from Maker. There are also, there are a lot of exchange tokens that function also as stable coins. There's some legislative things that have to be worked out around stables, but we shouldn't have the same fear or concerns from a legislative or regulatory point of view that we do for the other coins and tokens that don't hold their stability. There's some issues around how the price remains stable, but I think it's a great way to sit outside of the volatility if you are somewhat risk averse while you learn in the space.
Mm, mm, mm. And for, let's call it, and I know that, and this is not necessarily a specific question of
Mm.
like Ethereum per se, but and also the technology is going to evolve. But do you foresee in the future individuals being able to get some kind of stream of dividends or coupon
Mm.
payments from digital assets?
So we had a period of time before, like I think of the earn product with Gemini. I
Mhm.
think of Coinbase having its own, but pulling it until the regulatory issues surrounding it. There's kind of a cloud of regulatory uncertainty or pushback that's
Yeah.
just going to have to be resolved.
Mhm.
The short answer is yes. I remember before those the systems were or products were shut down early when I first started using Gemini, parking my crypto on an exchange. I don't recommend leaving things on an exchange because the exchange is meant to exchange one currency for another.
Mm,
But as a matter of risk to reward, the amount of earning on some of those coins and tokens was just dwarfing
mm,
the amount that could be earned leaving your fiat in a bank. It's
mm,
ridiculous. You could hold 6, 7 figures worth of money, and it is literally laughable. I could literally find more coins in my sofa than I could earn with 6 figures in
yeah,
a bank. It's
yeah.
absurd. And
Mhm.
then for the privilege of me leaving it there on a fractionalized basis, because we know if we
Yeah.
all showed up at the bank, we could not all get our money. Um, but
Mm,
then you contrast that with the opportunity to have, I don't know, $1,000 worth of Tether or
mm,
USDC or something, and leave it there on
mm,
the exchange and get a return. It was shocking the amount of money that was being generated, which
mm,
is why it's no surprise that it would create concern with the
yeah.
status quo to pull it. So the short answer to your question is I do imagine a world. It's not a matter of if, but when.
Mm,
And if not in the United States now, there will be opportunities in other markets, which is creating a real brain drain here in the United States.
yeah. What would you say to a family relative, a close friend who is terrified of investing in crypto or owning crypto because of the price fluctuations or volatility? What would you say to them? Someone who's really close to you,
Right.
right?
So they already trust me. So there's a lot riding on it, right? Well, this is great. So there are a couple of key things that I would share with my family and friends and my favorite listeners. You are those people as well. The one, and we talked at the top of the show about it, that volatility isn't unique to crypto. And
Mm,
that to remember again that all financial markets, including traditional assets such as stocks and bonds, can experience fluctuations and volatility. And crypto is subject to those same fluctuations. Crypto is still an emerging asset class, so it's in its early stages. It's still developing, and that certainly can contribute to volatility as well. And as the market matures and becomes more established, it's certainly expected to become less volatile.
mhm,
Um, Volatility actually can be beneficial.
mm,
So we've talked about it. The minute you say it, it's kind of this buzzword that means volatility bad, but
mm,
it should be noted as an issue for investors to focus on, but it provides a lot of opportunities for those who are willing to take risks with that particular asset as part of a larger portfolio. That if you
mm,
have something that is relatively stable and is not going to earn a significant amount, but you can rely on it to be 4, 5, 6% over time,
mm,
then maybe you counterbalance that with something that is more aggressive. Any emerging asset class. I remember talking about uh, foreign markets in
mm,
that way. And I remember having a conversation with a financial planner. It's like, this is really rough stuff. mean, you can make like 30%, but you could also lose like 70%. And I'm somewhat risk averse. So I was like, oh, we'll come back to that later. But volatility can be beneficial when you can take down markets and increase your positions for the next um, surge. And so leaning into that can really have a nice return on investment. And then finally, volatility can and probably will decrease as the asset becomes adopted, greater adoption, more individuals, more institutions start to adopt cryptocurrencies. There's greater regulatory clarity and certainty. We're all using the same language. That we can expect from that the market will become less volatile. There's increased stability when more people are using something and they
Mm,
trust it as
mm,
well. And we've certainly seen that in stock markets, in foreign exchange markets, and other emerging market equities. Again, maybe like a foreign exchange. So those would be some of my takeaways in terms of recognizing it as what it is today, and also recognizing the potential of what it will be, not if.
mm,
Crypto is going to fund and be the rails that um, for the Internet of Things are,
mm.
with artificial intelligence, the intersection of AI and blockchain and crypto. When I think of the power of decentralized finance, this is not going anywhere.
Mhm.
And so we have to understand it. We have to know the language. We have to lean in as a matter of education and prepare ourselves, or like stay ready so we don't have to get ready, particularly in a down market where people aren't chasing price,
Mm.
right? This is a great opportunity, an important opportunity to learn. 2024, I believe, not legal or financial advice, but in my professional opinion, is likely to see an upsurge again. We've been in a down market for 3 years. Generally speaking, that's followed by an upcycle, which happens to um, coexist or will coexist with the halving event that we mentioned. So it's time to really take a closer look and to focus on the future and prepare for the future today.
Yeah, I think 2024, 2025 is going to be an exciting time. And for some reason, I feel like for most individuals who haven't, taken their time to really understand this new asset, I feel like, and I don't know why I feel this way, but it's a
Mm,
gut feeling. I feel like it's getting to almost like this opportune moment where the price of, let's say, Bitcoin and other digital assets are going to just take off exponentially, and later down the line many people will be looking at it and feel like it's too late because
right,
maybe it's like, filling the blank with regards to whatever price it could appreciate to from
right.
here. And I just feel like before that, the ETF approval, which is something which is being talked about right now,
Mm-hmm.
before the halving, before Coinbase wins a lot of the um, challenges it's taken to courts with
Yeah.
regards to the SEC, I think, and also before regulation goes through the House and the Senate, there's just so many things that are coming together in a way that many people who are not in our community, specifically referring to the crypto community,
Yeah.
they are going to miss out, because if all of these things converge and they converge in the way that we anticipate it will, like
Mm,
ETF approval, the halving happens, the regulation comes
mm-hmm.
in, and also Coinbase legally wins most or all of its suit, it is going to be exponential in terms of growth. So
Absolutely.
I'm hoping people grab a copy of the book, read it, prepare, understand,
Mm-hmm.
get exposure, before the train literally leaves the yard. But with that being said, and I know perhaps maybe you don't often do this,
Mm.
but when you think about, and you can answer the question from two different standpoints, or you could pick one. When you think of crypto as an asset class, in total worth about 1 to 1.2 trillion dollars right now,
Mm-hmm.
where do you potentially see it going? That's one way to look at it. The other
Mm.
way is to directly speak to the price of Bitcoin and where you anticipate that going. So you could pick whichever you're more comfortable, responding.
Yeah. It's, it's interesting to focus on the value. I love, and I'll leave this with listeners going to coinmarketcap.com to track not just individual coins and tokens, but what the overall valuation is in the space. And it's a pretty small amount in comparison to traditional finance today.
Yes.
That is, it won't ever be lower.
Yes.
I'm willing to stake my reputation on that. It's not going down.
Yeah.
It can only go up from here. And the
Mm,
sky is really the limit, because some of
mm,
the limitations that have been put on the haves and the have nots will buckle under the weight of something that is not controlled by those who would have there be 1% and the 99.
mm,
It makes me think of an interview that I did early. I feel like it's was one of the first 3 or 4 episodes of Tech Intersect back in 2020,
mm.
and it was with Andreas Antonopoulos.
Amazing.
And for those who don't know, definitely will uh, include a link to Andreas's information. He's one of the preeminent minds in this space, and also holds the industry to account to be as good as its promise, to borrow a political phrase, to really focus on the 99%. Like, it
Mm,
literally, it being Bitcoin in particular, he's a Bitcoin maxi, and with good reason. And was instrumental as a cypherpunk in the early years to help divine the course for the community. He
mm,
is really focused on inclusion, this idea that this is the type of things that allow this is a type of thing, this technology that allows for rules that we can all see and agree without rulers.
mm,
And I love that so much because, and I did this Medium article about Kwanzaa principles, the African American celebration right after Christmas, leading up to the New Year, that focuses on a number of principles. One of which is like cooperative economics, collective work and responsibility, those things that talk about self determination.
mm,
And the ethos and spirit of that celebration really aligns quite nicely with cypherpunks, completely different groups, but aligned in the idea of self-determination, which is possible.
yes.
And it's not a matter of if but when. We are witnessing a dramatic, a seismic change in the power structure and dynamic for opportunity that is
Mm,
not driven by anyone in particular, but is
mm,
for everyone if we get this right. Like, the only limitation at this point is our ability to educate and position ourselves
mm,
and start where we are. And so that's why Digital Money Demystified was so important for me to share not only my journey, and I talk a lot about my own journey in the introduction and in the chapter titled Separating Fact from Fiction. Um, that's it, that's my love letter to you. At the end of it is like your call to action of where you go when you want to go from cash to crypto. In the middle,
mm,
that's
mm,
where I want you to spend most of your time. Those are the 10 most pressing myths, and how we right size the conversation. So we remove that final barrier, which is mindset, leading to the education that will ultimately lead to financial empowerment. So if we leave folks with nothing but that reality, that, as you said, this is the time this is the time, this next 18 months,
yes.
from, the book comes out October 24th.
Mm,
The next 18 months,
it's huge.
huge. The world will change more in the next 18 to 24 months than it has in the last 10 to 20 years,
Absolutely.
on the rails of the technology that we're talking about now. So positioning ourselves here is the real flex, as the young people say. So I will leave folks with that thought. But that's why I know both of us are so impassioned about the educational opportunity that will lead to the transformation. It's not really about crypto. It's
Mm,
not really about blockchain. This is about freedom.
yes.
This is unparalleled freedom, because the tools that will give you freedom for the life that you divine and deserve, so you spend more time with the people you love doing the things that you love. It starts with the foundation about what the next opportunity is. That's what you spoke about, right? When you
Yes.
compare real estate and the advantage of, yeah, it'd be great to own it. And there's, until, I think of sometimes volcanoes might create new land masses, but unless and until that happen, the land is what it is. It's finite.
If,
Bitcoin is finite.
yes.
And so those are the things that we want to focus on, so that we position ourselves to take advantage of the next great opportunity.
Absolutely. I just want to, speak on behalf of the individuals who are already in the crypto ecosystem, saying a big thank you for putting together something that will be incredibly helpful for people in our community. And many individuals might be listening to this and they might not understand the gravity of what is potentially to come over the next 18 to 24 months. But those who heed, this, who are listening and just heed this word of advice, the advice is steady, learn about this technology, and digital money demystified is a phenomenal starting point. And Prof, you are literally helping our community significantly, right?
Mm,
Because looking at where the crypto ecosystem is, we are literally on the cusp,
right.
right? We're on the cusp of liftoff, and the book is coming at the perfect time, and next year's halving. So my prayer and hope is that as many people as we could possibly imagine get their hands on a copy, go through these myths so that
Mm,
they are reassured that digital assets is the future. The same way we've cherished physical property for the longest time, it's obvious to everyone that the future is going to be more digital and tech enabled than it is
mm.
going to be physical. So our assets, our wealth, our property needs to have a digital component. So yeah, thank you so much for taking the time to discuss crypto and Bitcoin volatility with us today.
Absolutely. Thank you so much for answering the call to help me flip the mic and engage in this conversation. And the conversation continues. But I think there's a lot of good stuff in here for everybody to focus on, and let folks know how they can learn more about you and your work as you continue to educate people in this space as well.
Yeah, absolutely. You can find me on Instagram at the Investing Tutor. I'm also on Twitter at Investing Tutor, and LinkedIn. You can search for me at Hans Boateng.
Excellent. Thanks so much, Dr. Hans.
Yeah, thank you so much.